Hello, everybody. Welcome to the Build Weekly Roundup for week 48 of 2025. As always, you have myself, Cameron Otsuka, and Matt Dines here to talk through the three topics that we put together for you today. Number one, kind of starting us off, Matt's going to dive deep into what's going on with Russian international oil assets being divested, specifically around Lukoil, but he'll expand on from there. And then how does that kind of tie to the broader offshore dollar in general, but specifically he'll get into the China dollar and euro bond issuance as well. And then at the very end today, we'll talk about kind of where this all leads for the Russia-Ukraine situation, potential for a peace window opens as well. And then kind of tailing off of that, if you stick around for all of it, please do. Matt will then also drop a few little hints about kind of maybe where he sees things going in terms of Bitcoin and how that relates to the government as well. So let's go ahead and just start us right off here, Matt. I'm going to flip us over to the presentation view. But first off, right at the gates, Treasury sanctions major Russian oil companies. Maybe can you talk a little bit about why this is so important and kind of why this kicks off the rest of what you're going to talk about today around Lukoil?
So for background here, this is a story that's been developing since October 22nd. As Cameron and I kind of record once a week, talk about the major events, the developments of what we're going through in finance, geopolitics, money, everything in consideration in this, this era of transition that we're navigating through. This story really clicked with me. We saw the headline. We haven't discussed it in prior weeks, but what's going on here and the importance of this broader picture multi-week development finally clicked with me on Sunday night. A couple other podcasters, we'll get into those, dawned on me the impact this was having in bond markets across currencies globally as well over the last 3 to 4 weeks. So what happened with the Treasury sanctions? Basically, we've seen since the escalation of the Ukraine-Russia conflict towards a kinetic activity in February 2022, we saw the sanctions go on applied to Russia, specifically targeting their energy industry. Heavily focused on the natural gas. Is where the headlines have hit. You think about things like the Nord Stream 2 pipeline, if you recall what happened there. Sanctions against Gazprom Bank, etc. Oil was kind of secondary. It's taken a secondary role relative to natural gas at that over the course of the prior 2 to 3 years of this conflict. But in the last, let's say, 6 to 12 months since we've had a new White House administration in charge, the tightening the grip on the oil sanctions has become more and more into focus. And that's really where we find ourselves today. So prior to October 22nd, we were still finding, you could see this in headlines, Russian gas was still making it to export markets and ultimately finding its way to other countries on the open market, China, India, etc.
Relabeling barrels, things like that.
Exactly. So we saw basically the net impact on the financial sector from that was Russia was still able to access the financial markets, like the overlay on top of the actual real goods and production, like the trade of oil from the producer country to the import-export markets, international trade on the high seas to the final consumption destinations. They were still kind of attached to that, and that is a funding mechanism for a domestic financial system. Basically, what we've seen over the last 9 months, or technically like 11 months of the new Trump 47th administration, has basically been a tightening down. And after, all of the other kind of episodes we've seen this year with White House policy, Liberation Day tariffs, big beautiful bill, shutdown, all of that going on, this has been kind of in the background as part of the process of working towards some sort of settlement between the parties involved in this Ukraine-Russia situation. So that's where we are today. October 22nd, as Cameron has the headline up here from the U.S. Treasury's website, what they did is they gave a deadline for all of the international oil assets. So these are, production facilities, getting barrels out of the ground, um, to there's pipeline, other energy related infrastructure, anything that the Russian oil majors, so their version of, our own, if everybody's familiar, if you're a Western audience, like US oil majors are going to be your Exxons, Chevrons, et cetera. UK or Dutch, it'll be Shell, um, France, Total, et cetera. Basically, what this is doing from the Treasury's perspective, any entity from a cap table structure, which defines ownership, that has the Russian sanctioned oil companies as a member of its equity ownership behind it, is going to be treated as a sanctioned party and not allowed to be interacted with in the dollar financial system so far as the US Treasury touches it. So, what does this mean in effect? If you're involved with this trade, if you're a country or a commodity trafficker, one of these trading houses such as Vital, Trafigura, Glencore, et cetera. We'll get into a background on those in just a second. You're not going to be allowed to face those in a transaction as far as the U.S. Treasury and OFAC are concerned. So all of any of these assets that are outside of Russia's, borderlines, or like that define its own sovereign jurisdiction, those have to be divested, and this is where the U.S. Treasury, made the order on October 22nd. They provided a deadline. This has to be done by X date. I think it's December 13th, but double check me on that. But basically, we're in the middle of this really tight window. We're halfway through. Like if the starting gun went off on October 22nd, we're in late November. It's November 21st as we write this. Thanksgiving's next week. Mid-December is right around the corner. Basically, what this has done is it's put the entire global oil industry. If you go back and read The Prize, the book by Daniel Yergin that catalogs the history of oil and geopolitics since the late 1800s up until roughly Iraq Gulf War One. What we're going through right now would be a key chapter event described in that book. This is a huge development in international relations and the energy industry, just bar none. This is a key milestone event, largely going underappreciated, in my opinion, in the broader discussion of what's going on in capital markets at present. So what has to happen? All of these assets, and there's a laundry list of them, mainly in the Eurasian region, pipelines, oil projects, et cetera. Countries most Westerners have never heard, or like specific region or states, projects, et cetera, that most people who don't follow the energy space are not going to be familiar with. But those assets need to find a buyer. Like it's a forced seller situation. And this is where that headline coming up Sunday night, when it popped up that Chevron was in the running for essentially buying existing projects where it was already taking part in a joint venture. So there's a few of those. Exxon has those as well. You'll see these development projects or asset development projects go into development with a group of different companies. Like usually they'll pool their capital, build up a project, they'll partner with each other, et cetera. And so what Chevron was, rumored to be doing in the headlines that I saw Sunday evening was any project where they were already on the cap table which means they've presumably already done all the due diligence. Everything's just kind of dialed up, ready to go. Um, they mentioned they'd be a willing buyer to basically increase their equity stake in certain projects. Same thing with Exxon. And you've seen other companies floated here, a lot of them U.S. domiciled, like Carlyle Group, et cetera. So that really got it to click for me Sunday evening. What's going on here and the importance. But what is likely to happen? You just ask a few questions. Well, how do you even sell these things? If you're buying a sanctioned entity, where does the well, how do you
Who's
how
gonna
do
actually
you
work with you on this?
yeah, who do you pay? Like, how do you settle the transaction? How do you compensate that seller for for giving up their property, right? This is where you dive into the weeds. What's likely to happen as this plays out? These transactions are going to be dollar settled. We talk about the onshore and offshore dollar. Well, not all dollars are created equal. We got to isolate what type of dollar, and what's most likely to happen as the Treasury sees it, is that these entities then, one, the sale proceeds will go into, like, think about it as like an escrow account where those proceeds will accrue interest, et cetera, like on behalf of the seller to compensate them for their property. And that'll probably be parked at a U.S. regulated financial institution in New York, most likely. And then the bank or financial institution that handles the dollar transaction for the economic activity, like where are these barrels shipped, where do the pipeline royalties go, et cetera, those will also operate from a domestic U.S. bank. That Treasury and its OFAC arm can monitor and watch to make sure these sanctions are enforced. So on the net, what's happening here in the big picture? We've talked about this before. What's going on with the offshore or Eurodollar system? The big development underway since 2022, when we forcibly shut down LIBOR and we moved the center of gravity for the overnight settlement of money market dollars or short-term dollar financing in this global dollar credit system. We moved that to New York, right? And instead of LIBOR, when everything is just some made-up bank interest rate, not actually rooted in any market transaction, now we've got SOFR, where you've actually got one, it's collateralized, non-rehypothecated, but also based on market pricing between banks, firms, investment companies, pensions, et cetera, who are taking place in the secured, tri-party repo market, et cetera, to come up with this overnight index rate, to come up with a cost of dollars on a short-term basis. So what that's effectively doing is it's pulling the power away. What domestic U.S. policy is actually doing is taking the keys away from this dollar system, away from the rest of the world, and bringing it into the domestic U.S. And then you see that same thing happening with this U.S. Treasury sanctions order on Rosneft and Lukoil. What this is representing, it's one step. It's pulling the oil, dollar-based transactions from other global money centers where these numbers are printed. It's pulling them into New York or U.S. regulated financial entities. So it's part of that broader trend. You think about the meme you see going around, the death of the dollar, de-dollarization. I think from our point of view here on our weekly roundup and our soon to be rebranded weekly title for our show, like one of our themes we got here is this isn't the wholesale death of the dollar, period. It is the death of one type of dollar, however. Like, it's this offshore dollar, this legacy post World War II, rehypothecated, under reserved, all of that dollar that's being sucked in or reined in towards the domestic United States, where policy, interest rates, all of that can come under the purview of U.S. regulation. So how do we know this is a big deal? What would you be looking for I always say follow the market signals. So if you want to do some just very crude TA here, this one is crystal clear and obvious. If you look at the Lukoil stock price on the Russian MOEX exchange price, this is priced in rubles. You can't trade these if you're in the U.S. They're under sanctions, so you won't even see these prices from your U.S. broker dealers for the most part. If you go to Lukoil's website, they present this chart. What you see there, this is a 3-year or a 5-year look back window. Um, and you see Lukoil stock price, right, starting, throughout 2023, you see this just rally, right? But from 2024, Jan 2024 up until today, you've got a very clear downward sloping support line. It's been hit 1, 2, 3, 4 times, tested as support, rallied off of it each time. The first 2 times, after the first 2, you did see the final higher high, but every other time after it's tested that support line, second time, lower high, that's a bear market indicator. Then you get another lower low, another lower high here, August, midsummer era. And then on this news, October 22nd, when you get that OFAC sanctions declaration issued, break the trend with selling, and then you see it confirmed by volume. Um, Volume you're looking for as a signal to confirm the price trend. It's secondary. You look to price first, but both of those two things, price and volume, and that clear break of the trend line. This thing is very serious, like to the Russian economy. You've heard key Russian figures like Vladimir Putin or the oil company execs have mentioned this action will probably lower revenue flows into the Russian oil majors by ballpark 30%. So that's a serious number here. That's pulling away, in the global landscape of capital flows. That's pulling away a massive amount of capital flows into the Russian economy, which is really like an export commodity dependent financial system. So that breakdown in Lukoil is confirming, if you're a technical analyst, it's confirming kind of the seriousness of this issue if you're looking for that signal. All right. So next thing to happen here, this was 2 weeks ago. We didn't talk about this either, but you've got these trading houses, right? And kind of got to this earlier. These trading houses are basically the man in the middle who connect the producer. So let's say this oil is coming from like the Baku oil fields, which have been in development for like over a century. They're in like the Caspian Sea region, all of that. You get those oil-rich, assets, and the producers bring those to market. Someone's got to buy from the producer and move the cargo to its final consumption market, which may be, India is where the oil tanker drops off his cargo. That man in the middle is going to be your commodity trading house, is generally what they're called. They're your Vitals, Trafigura, Glencore, and then there's number 4 on the list, fourth biggest in the world is Gunvor. And it tends to be aligned with Russian interests. But what these firms are is, in the technical sense, like in the actual sense of the word, marketing, right? The word marketing, or the field of marketing, in modern American times, right? If you find someone who went to business school and did their degree in marketing, a lot of stuff they're going to learn is, hey, how do you pitch your product, or present your features of your own widgets to the consumer market and get them to buy your stuff. It tends to be almost, you think about a marketing agency these days, what we call them. What do they do? Advertising campaigns. Think back, like in the world of commodities, you get back to the truest sense of marketing and the definition of the word. It's finding that like consumption market to match with the producer, and then you connect those two endpoints, and then you capture the spread. That is the business of marketing, and I think it's most apparent in the oil trade, just because it takes place so much on the high seas with these massive tankers. Um, so on November 7th, the Treasury, like the first reaction from Rosneft and Lukoil was, oh, we'll just easy, we'll sell them to Gunvor. U.S. Treasury comes out and says, no, we're not going to do that. Not going to work. Never going to get a license. Essentially, it's over a dead body, right? So that got rejected, and that brought us into the state of play where we began this week. The prior 2 weeks, it's basically been the rest of the oil industry, um, as well as the private capital industry, has been in, just shotgun due diligence phase, going deep on these deals to determine, all of the hair on the situation and how they're going to put their capital at risk to ultimately comply with this policy directive coming from the White House. Um, Cameron, any other thoughts on that
Well,
matter? Do we want to go into the um commodity traders a
I
little
was gonna
bit,
say,
or
I think
maybe skip to
for
that?
me, what would be helpful is, I know you put together a little bit on this, but how does Gunvor fit into the other set of traders, right? So it isn't immediately clear to me why they were targeted specifically beyond the headline of they're accused of being working directly or with Russia, right? So what makes them special versus the other options that are out there?
Yep. So these trading houses, especially in oil, you've got, five big ones. You got Vital, Trafigura, Glencore, Gunvor is fourth, and then kind of an upstart called Mercuria. Um, these firm, four out of the top five are based in Switzerland, right? So there's a reason for that. Like, it comes down to tax policy, public policy. It makes it a very favorable environment for these businesses to domicile there. But in terms of the capital base, like, this is an industry where, like, the nation state alignment and geopolitical alignment is very key, right? Because if you think as a nation state, think about your bond market, your credit market, your consumer prices, inflation. A lot of that is dependent on, can I get the commodities my economy needs at a good price to keep prices stable, right? If you don't have that, it's tough. It's very difficult to support a functioning bond market, which is why you really see a lot of these trading houses aligned to some extent with kind of a nation state influence, or even maybe just a political or capital power faction within a nation state. Um, so I mentioned the top five. Gunvor is number four, and it's also one of those that is operationally headquartered in Switzerland. Now, in terms of political alignment, maybe just take this is Perplexity's summary of each situation. These things are very hairy and complicated. It is a very complicated industry. Most of it takes place on the high seas, and it is of very high geopolitical importance for all of those reasons I just mentioned, for the role of commodities access for a nation state's economy. So each one of these firms will have some sort of, political environment, or it could be multiple. They might sit in the middle of a lot of worlds. So I won't go through each of these here, but each one of these has its own. I'll say one that's, stands out in this case. Gunvor is alleged, uh, according to the U.S. Treasury, to be a Russian state proxy. And if you look to that, you look at the geopolitical character, say it's Kremlin aligned, despite, there's been some ownership or transaction sales. On the back end, these tend to be owned to a large degree by the um, managing members, or like active employees involved in the trade. So this is very complex, but you're getting into, like, the nuts and bolts at the heart of, global trade when you look at firms like this.
Got it. That's super helpful. And so then, let's go a little bit broader here. I think this helps me better understand why this is so critical for Russia, but it seems like there's other things going on in Russia right now, and it relates to the war going on in Ukraine, but also just broadly kind of their alignment geopolitically. So can you kind of explain how this might tie then into some of the other news and happenings that we're seeing going on?
Yeah, so we'll get into this, but like this sanction step, right? We just took it, like we dialed things up a notch on the sanctions front. And the hope for the White House is this actually defuses the Russia-Ukraine situation, which is really a proxy for a Europe-Ukraine or Europe-Russia collision. Um, the hope is, from the U.S. perspective or the White House, is that by stepping in and being kind of the escrow agent or the man in the middle, that you can tone down the kinetic war and deliver some sort of peaceable, steady state that will last for some degree of time. That is the hope. Now, in terms of what's the impact here, you have two sides, right? It takes two to tango. It also takes, it takes two to stop fighting, right? So everybody, both sides have to put their swords away because if one side doesn't, the other one doesn't trust them, and the fighting will just never stop until it reaches the end point. One side completely conquers the other. Um, so in terms of the Russian side, this has a massive financial impact. We'll get into that on our next theme. Russia has essentially been frozen out of the dollar system, full stop. You can't interact, um, with your commodities production, your oil and gas at this point, and access dollar capital markets, which despite the reining in of the offshore dollar system is still pretty much the largest, source of capital and liquidity in international trade or in the global economy. It's just the world we live in. So Russia, if we go into the bond story now, you'll see a developing situation in their own financial system. So we'll start this new thread by a parallel topic that came out over this time frame, uh, where China has issued US dollar denominated bonds to access dollars, like obtain dollar capital. It started on November 5th, where they had a very successful $4 billion bond issuance, which was oversubscribed by about 30 times over, like a 30x bid cover. What does that mean? For $4 billion of demand, they got, on order of magnitude, ballpark, $120 billion of subscription interest. That is a massive amount. Like you're looking at US Treasury debt for, every week it's originating T-bills or every month originating a coupon bond. You might see like a 2 to 3 bid to cover. So 30x is telling you, wait, what's going on here? There's a massive demand. What this is telling me from my point of view, you think about this offshore dollar system, all of that credit-based dollars that have to find a borrower to deploy into in order to park, to earn some yield and also find safety. Tells you at 30x how much, or it really reveals the state, I would say, of the demand for money. When China shows up, hey, we need money. Like borrower demand is light and the supply of dollars is high, which is what you find in that late cycle dynamic that we've talked about in the Gordon Pepper money, credit, and asset prices framework, right?
Previous episodes.
At
Yep.
this point, that point, and at this point in the cycle, the dollar supply is reaching more and more out into yield and risk in order to keep its level of interest income um, status quo where it sat prior. So these China bonds, right? These China dollar denominated bonds, they're custodied in Hong Kong, cleared in Hong Kong. Issuer is going to be the Chinese government. If you're in the domestic U.S. banking system, you're not buying these, right? These things cleared at, or the auction cleared for the 2 year bond, no spread versus the U.S. Treasury. And then for a 5-year bond, it was, I think, a 4 basis point spread. None of those from a U.S. investor standpoint, if you're a bank or an insurance company or a pension, none of that risk makes any
Why
sense.
would you add on extra layers of risks for the same yield, basically?
Yeah, there's no way. So where this is coming from, it's the offshore dollars that need a place to park. And China is also in a situation as a borrower. It has some demand for accessing dollar liquidity, just in riding behind that overall cyclical backdrop that we described. Um, they did the same thing for the euro-denominated bond as well. That offering went off, I want to say earlier, this was Tuesday of this week, 4 billion euros. That bond offering for the same functional amount, 4 billion of euros rather than dollars, that issuance was oversubscribed 25 times over. So it tells you, wow, all of that supply of offshore dollars or euros, like they're in a situation as well where they're even hungrier, or as hungry, almost as hungry than the offshore dollar denominated, money supply. U.S. domestic uh, dollar system is probably much more close to a balanced market. You don't see bid to covers anywhere near that high. But this, general dynamic is what the China US dollar bond sale is really pointing to. So if you think about it in the backstop of what we just talked about with Russia and the oil majors being sanctioned, they're being cut off from the dollar system. That it's kind of like if you think about the game of musical chairs, that's chairs being pulled away. That producer, those businesses, they can't access dollar capital anymore. They've got to figure out something else to be able to functionally settle their sale of their widgets, their barrels of oil. So you got to turn to something else, and that's where you get into the second side of this story. This is July 20th. This is over the summer, but Russia has been selling precious metals to China. Their levels have reached the $1 billion mark for the year. This was late summer, so this was a story already in process. So gold was leaving from Russia to China, and then the other part of that pathway was currency was making it back, most likely Chinese yuan denominated. So you have a stream now, from Russia's standpoint, they have been sanctioned out of the dollar. They almost totally are locked out of the global dollar capital markets. Full stop. Until something changes, we reach a peace settlement, they're not going to be let back in. So in the intermediary, they have to keep funding their effort of the war, and what the financials seem to suggest. If you're putting two and two together in the headlines, Russian gold goes out, moves its way to China, shows up on the Shanghai Futures Exchange, et cetera, and all of that instrumentation that's been set up. We've talked about it, I believe, before. Um, and then yuan comes back as a payment stream, and now the Russian financial system is essentially operating itself or engaging in international trade in yuan,
On
right?
yuan rails, yep.
Yeah, and this is where you start seeing the stories this week. Now, United 24 Media, I don't know who they are, so I don't vouch for them, but just the spirit of this headline holds. Russia starts selling off its gold reserves to fund the war budget, breaking a long-held taboo. So, like, they are actually having to use gold to pay for the war. Like, this is hard money by definition. If you go back, remember the Game of Thrones show,
Yeah.
right? There's an episode where the mercenary soldiers won't fight unless they deliver gold. This is
Right.
that exact situation. Um, and then you see another headline. This is October 31st, so we're kind of jumping back and forth over the last 3 to 4 weeks here as we piece everything together. Russia announced a plan to issue it's sovereign yuan denominated bonds, right? So if you piece all this together, gold's going out, they got a yuan payment flow coming in. Now they're going to start borrowing in yuan to tap the capital source to, get the nation state the things it needs to survive, essentially. And at this point, what that means in a war is procuring goods, services, paying for soldiers' wages, all of that. So this is the state of things. The goal from the Trump administration is that this pressure um, on the Russian side has essentially like bottled them up, right? You can win a war by cutting off the financing, right? The day you can't pay your soldiers is the day, they lay down their arms, they'll stop fighting for you, and you, by definition, will lose. Um, Europe also doesn't have the financial capacity, just because of its own situation, to also prosecute the war effort in Ukraine. And then from the White House 47th administration policy, they've pulled back the funding aid, um, and in large part from what the levels it was under the Biden administration, for Ukraine itself to keep prosecuting the war. So both sides, like right now, we are in a window of opportunity for, maybe it lasts, it's probably only open for 2 to 3 more weeks, where we could reasonably have a peace settlement between both sides. Like something could take place here. It's hopeful, but it's by no means guaranteed. Things can happen from here that basically, grasp defeat from the jaws of victory. A lot of things could go wrong. There's only one way for this really to go right, and come to an agreement. But at this point, if you're looking at this from the U.S. perspective, my opinion on this matter, this administration has done everything it can do to keep this war from escalating any further than it already has, which, let's be honest, it's well past too far. Like there's hundreds of thousands, if not millions, of lives lost, both soldiers and civilians. It's an extremely sad story. So this is a window of hope. By no means doesn't mean success is guaranteed, right? We'll get into that. Russia has every incentive not to trust Europe. Their view is Europe is coming to collateralize its own economy. Like this is a financial war at the end of the day, or it's a financial disagreement at the end of the day. And finance and money is just one kind of battlefront where wars take place, but it is the key one. So Russia doesn't trust the EU,
Which has
as
already
they
said they
never
are willing to
have.
seize Russian assets to then go fund the Ukrainian side, right? So there's more than just
Yeah,
a worry. It's an actual fear that it's been put out by the
yeah.
EU.
And history said, like, it's just dialed up in the Russian history. This happened in World War II. This happened with Napoleon. They're always coming to invade, and Russia's always fearful and will never trust Europe on that topic. So what they need to trust, what you're asking them to do here, is trust the U.S. as the man in the middle, as the escrow agent. That's the key. That's the only way this works. So we'll find out here. Hopeful, but if you want to be a pessimist, you would take a divergent view. The one reason I see for pessimism, you saw I think this is the highest ranking official in the French army, made a statement to the French public that they should be prepared to lose children in face of the Russian threat. So what this is kind of dog whistling, in my read, is a call to the French public, to, like, from the military, for kind of patriotic duty, what have you, to now not just pay a financial cost, but actually pay the human lives cost of your society and civilization into this war threat. So, like I said, it's two to tango. Both sides have to put their swords, away. This is the opposite of doing that. So we'll find out, and this is today. This is the headline. So we brought you up fully to speed. I feel like I've clicked with me over the weekend, and you know, I've realized this is actually the driver of what's going on in capital markets as we're seeing the dollar system slow down. Uh, there's also a massive amount of uncertainty about this event. Should be hopeful. Like if we can resolve this, this is pro growth, pro business, everything, like all the above checks all the boxes. We're in a window of volatility, um, both the economy slowing naturally, um, but also just markets don't know how this is going to be resolved. You've got basically every oil major in the world who is, in the good graces of, the Treasury's OFAC department, scrambling for due diligence, really figuring out how they can put their capital at risk into these deals. When, if you look at the history of the oil and gas industry, when you deploy into a foreign market in deals like this, like your capital is basically a sitting duck. You're in someone else's sovereign jurisdiction every which way that an oil asset or production, has or capital has been thrown into a project in a non-U.S. or questionable jurisdiction, that they found every possible way to lose money. So the risk is extreme, and you basically have 2-3 weeks to figure out how to deploy what's going to amount to billions of capital, even after getting fire sale prices. So there's a lot on the line here, a lot of uncertainty to work through. So that's that on France. And then you're also seeing the headlines here. Ukraine now is faced with the difficult choice in this headline as Trump demands acceptance of peace. Of course, Trump wants acceptance, like they're trying to get to a peace deal. And Ukraine is that foster child in the middle, I would argue, between Europe and the UK and the United States. So you've got two angles here. This is where the situation for Ukraine just, there's no other way to cut it than it sucks, right? Because under one route, you're like, well, I'm going to give up territory. You have to. This is what you are as a borderlands. Like there's certain countries that have the reputation as borderlands. They're just that middle ground where the powers on either side just fight. Like the Scottish border towns. Like you're just unlucky if that's where you happen to be born and that's where you have to spend your life, right? Because over the course of centuries, like they're just going to get raided and invaded.
Right.
It's just that's your destiny. I'm sorry. Ukraine is one of those. Like it is a borderland. I think that it's in the title, and you're that man in the middle, and you're just facing at this point the Hobson's choice of the least bad option. And my perspective here, you've got a window for peace. You've lost a tremendous amount of life already. This may be the best deal we get for a lot of years, right? This may be our best opportunity here. Um, so we'll see. And obviously, Zelensky and Ukraine are facing a pull from, France, as you saw, especially like with the comments you saw from the general. Also, the UK to go a different direction here, which means more war. If you look back and really examine what that French general statement was saying, right? So really important epic we find ourselves in here. We'll know more. The hard deadline that Scott Bessent has issued is I want to say it's December 13th. So um, it's Christmas, it's holiday season, Thanksgiving in the U.S. coming up, Christmas, Hanukkah, all the holidays coming after that. Probably know sometime in the middle, and this we'll know one way or the other which way we're going, escalating up or down by the end of the year. That's where things stand. I want to close this long-term signal. We had no discussion whatsoever of Bitcoin um, on topic, but we did talk about Scott Bessent a lot. He's in the middle of one of the largest and most important deals over the 150 years ish time frame of the modern energy industry with this Russian oil majors international assets divestiture. Spotted last night at the grand opening of the Bitcoin dive bar Pub Key in Washington, D.C. It's a lot of signal here. It tells you what camp he's in. Watch for this. I'd say this is a 2 to 3 year story to play out, but I think we'll look back on what we saw Thursday night as one of these fun pop culture evenings. This is a signal of where Bitcoin is headed, and talk about the bloodbath occurring in Bitcoin this week. But this is where it's going in this big picture monetary international trade phenomenon we talked about for the last hour or so. Um, Scott Bisson is telling you something right here, so we'll leave it there.
I think that's a great place to stop it, like you just said. So again, as always, thank you everybody for listening in to the Build Weekly Roundup. Subscribe to us on YouTube. I know I've seen a lot more folks commenting on our YouTube Clips channel as well, so don't forget we also have a Clips channel. But appreciate all of that. So definitely recommend us to your friends and family if you like what Matt has to say. I know I do. It's a fun time just learning things and hearing from Matt. So again, thank you all and see you all next week.